We have worked our way from total income. We've utilized above the line deductions to lower our taxable income down to adjusted gross income. Now it's time to utilize either the standard deduction or below the line deductions to lower our taxable income even further. One of the biggest, especially if you're a property owner, if you're someone who lives in a state that has high state income taxes, or if you're both a property owner who lives in a state with high income taxes, then state and local taxes are really important. And that is things like the state taxes that you pay. There are also places that have city tax. All of those things are considered state and local taxes, in addition to the property taxes that you pay as a homeowner. You also want to keep track of any charitable deductions. These are things that you make not just to your church or your temple or your mosque, but also any 501c3 that's eligible to take these donations. Mortgage interest is another one, especially if you have a newer mortgage or a mortgage that has a high balance. The amount that you pay towards the principal is not deductible, but the amount that you pay in interest in many cases is a deductible expense, as well as the interest that you pay on a home equity line of credit in certain instances. There are limitations in terms of the amount that you can have on a mortgage and then deduct the interest on a line of credit. And it also, in most cases, has to be something that is improving or maintaining the home. It can't be funds that you pull from a HELOC for any purpose. It has to be something that's used for the maintenance and improvement of the residence. Medical expenses are another one where we're going to talk about this more in the next episode when we talk about preparing for the year ahead. But if in the year prior you had significant medical expenses, those are things that are deductible to the point that they exceed 7.5% of your adjusted gross income. And I will tell you, more often than not, when I see someone who self-prepares, they don't even go through this process. They just assume that the standard deduction is the thing that's going to give them the best juice for the squeeze. But I would encourage you, even if you're filing your taxes on your own, which I don't encourage you to do, to take the time at least this year and go through the process and see how much you actually had, even if you do decide to file the standard deduction. Because if you know that you're close to the line and there's some things that could have pushed you over the edge where it would have benefited you more to itemize, in the year ahead, you may take advantage of that knowledge and have a little more strategy so that in 2025, you put yourself in a position to itemize.